Okay, so what are the key areas that you're focusing on? Where do you see the opportunities?
Do you mean as a whole?
Oh, well, obviously from the buy-to-let side.
Buy-to-let is still professionalised. And, we do a lot around people that want multi-unit blocks. HMOs are big, as you know. Student accommodation is massive. Someone that pays for a child to live in Nottingham, I can appreciate that. And you've seen landlords diversify into that. Limited companies, I mean, you know yourself, it seems to be the way everyone's doing buy-to-lets. We were there at the start. We know how to do them really well. So yeah, it's really targeting that professional, but with the offering that you do get people that fall outside of the big two lenders that have the odd credit blip on there as well, and we can cope for that.
So if you think back onto the limited company buy-to-lets, it's sort of always been there. There's some specialist lenders. Was it Irish permanent people? If I remember back in the day. Well, but it never really sort of took a handle. Obviously, things have changed now, but. What proportion of business do you think is going down that route?
Well, anyone who purchases, or I would say most people who purchase a buy-to-let are now buying them in a company name. Most of what we do, and you can see it from our results, is it's very rare I see a personal name come through on a buy-to-let. But you do see the occasional one, because I'm not a tax advisor, but people obviously need to weigh up, I guess, the cost of transferring it and the cost that goes alongside it. But certainly, I've been here, as I said, 11 years, and it was just as the tax changes came in. So they would have hit 10 years into that, for example. I think that was the game changer, and the market, moved to that. And you can see it by the high street guys going in, TMW are in it, BM are in it now. They wouldn't be doing that if there was still
finally
a big
had to move into it, haven't they? It's finally taken a hold. So from our side, I think a lot of our landlords tend to be not accidental landlords is probably the wrong term. It's the let to buy sort of world where they've kept it and they moved on, so they've never actually taken a foot in. And we're quite London focused. We don't have that many transactions going on. Where are the hotspots in the UK?
Well, you've got cities. A lot of the city centres, as you say. I think a lot of London is built up of people that they retained a property 10 years ago. It suited them. You probably did the let to buy deal. You geared up a little bit on that for the deposit. The other one, it provided a good income. Certainly, all of the student towns tend to be very busy, and I used my sons at Nottingham. We've done phenomenal amount over there, but you are seeing different types of asset being built up there. Whether it's there's a large contingency of, say, let's say HMOs, multiple occupants for students, but also those big purpose built type assets. Now, they don't land in someone's lap every day, but we see a lot of that on the commercial side, on the Interbay brand, where people are using that and they're doing big business in that sort of stuff. But we all know the challenges for people trying to get on the housing ladder, and you certainly still see that bit in terms of commuter zones where people have got buy-to-lets, whether it's flats and letting them out as people travel into the cities for work. So the great myth that everyone I guess moved to the north and did all of their buy-to-lets up there, I certainly haven't seen that. I think people tend, and certainly the professional landlords, they tend to focus in the areas that they've specialised in.
And I guess one other point that happened about 10 years ago was the additional stamp duty of 3%.
Crikey, forgot about that.
How's the 5% taking a hold?
Well, I think it's like anything. If you're paying 5% and you're purchasing it, guess what? That 5% is going to come from somewhere, isn't it? And probably people have haggled it. I don't think that the stamp duty in isolation slows down buy-to-let, because, as I said, if I was doing it, I think I'm going to be paying 5%. I'm going to be trying to chip the 5% off what I'm buying in a lot of instances.
Fair enough. And I guess misconception probably from my side, if I look at 5% on a London purchase, it's quite a bit versus looking at some of the more northern
Maybe you
cities.
might revert back up to Lincoln or whatever it is, Dave, on there, yeah?
Well, now it's near enough for a Premier League team for Spurs visiting next season, maybe. So how would an investor in London actually sort of go about looking in these sort of core areas if they do want to become a sort of portfolio landlord? You've gone to the trouble of setting up a company. So again, in my eyes, do you set up a company for one? Maybe not. But if you are going to sort of look to build a portfolio, limited companies, that's certainly the way forward. How would you sort of go about?
Well, the Renters' Rights Act's coming in, so it's who's going to manage the property for you, who's the agent, having that advice about all the changes that are coming down the line there. Certainly, as I said, it's a really interesting bit is, do you see too many people stepping into it at the moment? I think you probably do from some of the younger generation that have good paid jobs that might not actually go, I'm happy renting, but I want an investment or I want a property. But I think 99% of buy-to-let mortgages, the first place they need to go is the mortgage advisor, right? Because you want to have that funding set up. You want to know about the options. And then, of course, it's who am I buying the property off? What are the returns? Where can I find out information about that? And then it is about who's going to manage that asset for me, because I think that's more important than ever at the moment. So, let's not make any I guess excuses about it. Buying a buy-to-let is not as easy probably as it was 20 years ago. And having that support network, in terms of professional services around you is really important.
Okay. So what sort of dynamic of person are you seeing? I mean, again, in hindsight, we should have all bought loads of buy-to-lets end of the 90s.
I thought you had a few, didn't you?
No comment. But the ability to get in there, I mean, I've dealt with clients who've made a lot of money because they got in really early. But like with getting in early to anything, you can miss the boat.
Yeah, but, I mean, it's interesting. We see a whole mixed bag. So you see people who've been in it 20, 30 years. Some of our larger landlords are quite mature in terms of their age. And I think that's a dynamic that you're seeing across the market.
Yeah.
But you are seeing, as I sort of tried to touch on earlier, that younger, I guess, more savvy person who are quite often are risk takers, right? Because you have to be brave going into that market and going, actually, I can see an opportunity there. We've got one landlord that does a lot of student stuff. He's been in the press. He's late 20s. He's got a portfolio of 15 to 20 million. So, it isn't like people aren't coming into it. And I think the interesting bit will be if with your aging landlord community is, how do they pass that on? Do they pass it on through their family?
Yeah.
Do they sell it? Will people come out and buy portfolios and do it that way? So, I think the stat is 1 in 5 in the UK live in rental accommodation. It's a fundamental part of the property market as well.
Okay. And if I think back to landlords expanding the portfolio, it used to be, right, get a hold of one property, it'll go up in value, extract the equity, buy the next one. Obviously, as rental assessments become more tight, when the tax rules change, what have you, how much ability are we seeing actually that happening, or is it they've just got to hold tighter?
Yeah, I mean, I guess it depends where you are as well. And obviously, rental affordability is more favourable if you have it in a company name because it takes into consideration the tax bit. Lenders. Products look very different than what they did 20 years ago. If you'd have said, I remember when I was at TMW, they launched a product with a 1.5% arrangement fee. People say, you're never going to sell that. It went on to be the most popular product they've ever had. And you can see that, when rates are higher, fees on the buy-to-let loans tend to be higher to bring down the pay rate. So there's ways and means around it. But again, that's why you need mortgage advice. Is that the most applicable product? What's going to happen in 5 years if you've taken a 5% fee and it affects your equity? Are you going to be able to refinance? And, that plays into the strength of the likes of you and your team and why landlords take mortgage advice.
Okay.